Welcome back to the AI Daily Brief Headlines Edition, all the daily AI news you need in around 5 minutes. We kick off today with Anthropic getting themselves a power user tier. Now, you might remember when OpenAI introduced their $200 a month tier back in December, many believed that the demand just wouldn't be there. However, while we don't know how popular exactly that subscription is, it's generated enough usage that Sam Altman said that the company was actually losing money on the deal. Anthropic is calling their version of the premium subscription Claude Max. The product allows users to pay to get around Anthropic's notoriously troublesome rate limits, gets priority responses during heavier traffic periods, and early access to new features thrown in as a sweetener. If you've spent any time on AI Twitter, you'll know that people have been constantly asking Anthropic for the ability to pay more for more service. There's actually two different levels of Claude Max. For $100, users get 5 times the rate limits of the $20 a month Pro tier. That math works out. But for those users who really burn through tokens, they'll want the $200 level that allows for 20 times the rate limit. What's not on offer, unfortunately for some, is unlimited usage. So is this about boosting revenue or simply recognizing that power users are underserved? As they say in the business, why not both? Anthropic's product lead Scott White said that the company isn't ruling out adding even more pricey subscriptions, saying we could see a $500 a month level. Ultimately, he said that the product roadmap is guided by user feedback. And the one loud, consistent piece of user feedback we've seen over the past year is that power users want to pay for more usage. Next up, a little more on the tariff fallout, NVIDIA has secured a carve-out for their China-based chips. Industry insiders had widely expected the administration to clamp down on export of H20 chips, which is the downgraded GPUs that are designed to get around export controls. NPR is reporting that the additional restrictions won't go ahead after Jensen Huang attended a $1 million a head dinner at Mar-a-Lago last week. Sources said that restrictions had been in the works for months and were ready to be implemented as soon as this week. They said that the president changed his mind after Huang promised new data center investment in the US. Chris Miller, a Tufts University history professor and semiconductor expert, commented, "Even though these chips are specifically modified to reduce their performance, thus making them legal to sell to China, they are better than many, perhaps most, of China's homegrown chips. China still can't produce the volume of chips it needs domestically, so it is critically reliant on imports of NVIDIA chips." Then again, that view is a little up in the air after recent reports of efficient training runs on new Huawei chips. However, even if the Chinese AI industry is trying to wean themselves off of NVIDIA, the market is still critical for the dominant chipmaker. 13% of NVIDIA's official demand comes from China, and that figure could be much higher if you account for evasion of export controls through Southeast Asia. All in all, it adds up to us continuing to not have a coherent picture of the administration's strategy when it comes to chip controls. Following inauguration, Trump pledged to wind back many of the restrictions on the AI industry. However, the enhanced export controls introduced in the final weeks of the Biden presidency are still in place. These regulations put limits on a huge portion of the world, including friendly countries like Israel and India. Then again, this does also seem like reinforcement of the idea that there's always a deal to be made when it comes to Trump. Now, over the last couple of days, you may have heard me wax poetic around what I think the implications of some of this tariff stuff are likely to be on venture capital. Nominally, I think that it's going to be a harder fundraising environment, not only for startups, but also for VCs themselves. But countering that point appears to be Andreessen Horowitz, who are reportedly looking to raise a $20 billion AI megafund. Sources said the firm is looking to capitalize on high international demand for investments in American companies. They added that international LPs view the fund as a way to more easily invest money in the US AI sector without the restrictions. So it sounds like this actually might be playing into and taking advantage of some of the tariffs. Last year, A16Z raised $7.2 billion scattered across the themes of American dynamism, apps, games, infrastructure, and growth. This fund then is both significantly larger and more focused than previous efforts. The gigantic size brings up questions about whether venture capital can scale up in this rarefied air. SoftBank is perhaps the obvious comparison. They raised their $100 billion Vision Fund in 2017 with very mixed results. The second Vision Fund, raised in 2019, is a relatively more modest but still massive $56 billion. The other comp that springs to mind is Sequoia, who currently manage over $56 billion in assets overall. Still, there hasn't been a venture strategy as capital-intensive as AI in the past. In fact, part of the reason that companies like OpenAI had to turn to big tech partners like Microsoft is that there simply wasn't enough dry powder in the venture capital coffers for them to get what they needed. Reuters sources said that a significant portion of the fund would be set aside for follow-on investments in companies already in A16Z's portfolio. And with portcos like Mistral and Safe Superintelligence and Databricks, there is a lot of money to be spent. There is certainly a lot of capital need. Lastly today, a little bit of institutional psychodrama. OpenAI has countersued Elon Musk, asking the court to bring an end to the billionaire's legal challenge. The court filing called for Musk to be prohibited from taking, quote, further unlawful and unfair action and held responsible for the damage he has already caused. It stated, OpenAI is resilient, but Musk's actions have taken a toll. Should his campaign persist, greater harm is threatened to OpenAI's ability to govern in service of its mission, to the relationships that are essential to furthering that mission, and to the public interest. Musk's continued attacks on OpenAI, culminating most recently in a fake takeover bid designed to disrupt OpenAI's future, must cease. Musk's attorney immediately fired back. In a press statement, he said, "Had OpenAI's board genuinely considered Musk's bid as they were obligated to do, they would have seen how serious it was. It's telling that having to pay fair market value for OpenAI's assets allegedly interferes with their business plans." The case is currently at a slow point as the parties await a jury trial next spring. Musk's attempt to seek an injunction to stop OpenAI from converting to a nonprofit was rejected in March. So technically there isn't anything stopping California Attorney General Rob Bonta from making a decision on the conversion. However, complaints continue to roll in and the active litigation gives him a good excuse to delay. Meanwhile, of course, OpenAI has a huge financial incentive to get this wrapped up quickly. The company's latest fundraising round featured $10 billion from SoftBank that is contingent on the conversion being completed by the end of the year. That, friends, is going to do it for today's AI Daily Brief Headlines edition. Next up, the main episode.